Okay guys, so also just before we jump into the charts, a quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. So now then guys, jumping into the charts. So the first one I want to pick up here is the German DAX. It pushed higher here today, and unfortunately it kind of failed to get closer to the, or should I say, it failed to hit the highest point of January, which is roughly around the 14,131 territory. Of course, as I've mentioned before this morning, that in order for me to get a little bit more excited with the upside, I need that break here above this area. So far, we're seeing that the index is kind of on a slight decline here. Intraday, I mean, initially it did push higher, like I said, but now it's kind of drifting back down a little. However, not all is lost still. We still have a few hours left of trading, so let's see if we can make a move higher here and overcome this 14,131 zone. For now, I'm still cautiously bullish. But as I said, for me to get a little bit more excited with the upside, I need that break here above this 14,131 zone. Now jumping into Dow Jones Industrial Average, and of course, as you have seen right now, guys, the data has come out from the US, and well, I mean, we did get the figures, the employment figures from US and from Canada. Now the main number, non-farm payrolls, came out lower than expected. I mean, the expectation was at 50K, but the actual number came out at 49K, so missing the forecast, and of course the previous number got adjusted as well. So this morning I was talking about that it was around 140 something, I think, K in minus. The previous figure came out, the previous figure got adjusted, and the new one is at minus 227K. So basically the actual number came out at 49, missing all the it came out, of course, better than the previous, but still missing the forecast. Unemployment rate improved. The US unemployment rate improved. The expectation was for 6.7%. The actual number came out at 6.3, so that's kind of okay-ish, I would say. Average hourly earnings hourly earnings for on a month-on-month basis for January showed up at 0.2% when the forecast was at 0.3, so basically missing the forecast. And but the year-on-year figure came out slightly better, so it came out at 5.4 when the forecast was 5.1. So the Canadian figures also were a little bit on the mixed side, I would say. I mean, the participation rate came out slightly lower, but and unemployment rate, unfortunately, kind of went went higher. The forecast was for 8.9. It showed up at 9.4. So basically, jumping into the charts here, the Dow Jones Industrial Average, we can see that yesterday, for example, it had a nice decent rally here. It pushed higher and it closed above that 31,000 mark. However, failed to reach the all-time high. Now, if we take a look at the cash index right now, we can see that the price currently is fluctuating around the 31,188 zone. So basically, we're still below the all-time high, but we're not far from it. So we're above yesterday's close and not far from that all-time high. So let's see if today we can get a nice good push higher again. So for now, it seems that the market is taking kind of a liking of the data, because although non-farm payrolls kind of showed up below the forecast, still they were much better than the previous adjusted figure. So that's kind of a good, in a way, it's currently seen as a good sign, where we can see that the market participants are digesting the news. Also, the fact that the unemployment rate improved. So yep, that's another good factor here, and the market is kind of still sitting on its or near its stops here. So Dow Jones Industrial Average from the technical side, if you want to aim for some higher levels, guys, wait for that pop above the current all-time high just to be a little bit more on the safe side. In terms of the downside, I would still like to see a drop maybe below this this upside line right here, drawn from the low of the 12th of November. Although don't get me wrong, it's a bit of a tentative one, but nevertheless I'm going to keep an eye on it, because a drop below it of course would already kind of mean that the price is below the 21-day EMA and further declines could be possible. Now jumping into NASDAQ 100. So here you can see that yesterday it closed just bang on kind of on that all-time high, and in a way, if I'm not mistaken, it actually let me just quickly double check this very quickly. No, just by a fraction of it, it kind of didn't really hit the previous all-time high, and yep, still this level here, the 13,563.64 zone remains the one to watch. Looking at the cash index right now, the index is kind of reacting positively to the data, and we're seeing a push higher. Currently the index is trading slightly above that 13,600 mark, so we'll see a new all-time high, because on the cash index, don't forget that this is main trading hours, but on the cash index we did kind of overshoot this, and we do have a slightly different all-time high. So here, for example, we can see that the price currently is trading around the 13,608 zone, so above this level, and that means that if it stays like this for another hour or so, well, we'll have a nice nice opening gap here to the upside, a small one of course, but nevertheless we'll hit a new all-time high. So for now, brace yourselves for that, and let's see how this is gonna, if this can continue actually pushing further north. For now, the only thing that we can do here, once it is in that uncharted territory, we can only aim for those beautiful numbers, like for example the 13,800 or even that psychological 14,000 mark. So keep your eyes on that, guys. For now, everything's looking quite positive here for NASDAQ, and let's see how this is going to play out today. So the last trading day for this week, if we can actually see a strong rally to the upside, that would be quite interesting, I think. And yep, going into next week, that's where the excitement could be again, I would say, because again, we would see that if February will prove itself to be a strong month. But again, for now, all eyes are on this, and if the price continues to trade above the 13,564 territory, yep, I'll continue targeting the upside. Now jumping into DXY, so good data, as I said before this morning, guys, if you remember, that we might see a bit of a hit here on the US dollar. Now, the reason is because lately USD has been acting as a bit of a safe haven, and yep, that's exactly what's happening here right now. So we're seeing a bit of a decline here on good data, and yep, for now I'm still gonna remain somewhat bullish, because first of all, we're still trading above this hurdle, one of my previous resistance levels, which now could take the role of support, this 91.24 territory, and yep, if it continues to trade above this, or at least above this short-term tentative upside line, then there is still a chance for the bulls to step in and drive this one higher. So in other words, something like this here could be possible, so keep that in mind, guys. And yep, for now, as long as we stay above both of these lines, above this short-term upside line, and above this medium-term downside one that got broken this week, yes, there is still a chance for the bulls to step in here. However, we start breaking both of these lines, then well, that's where it could turn out to be ugly for the bulls. Jumping into gold, so dollar weakening, gold pushing a little bit higher. I mean, logical. Here, this is what I talked about this morning. If you remember my Traders Espresso, that I was saying that we had a good drop here yesterday, so that's below this 1819 level, so that's wonderful. However, what I was also saying, that in a way we could see a bit of a corrective move here higher, which we are seeing right now. So that's kind of in a way all good news still for now. But if the commodity struggles to overcome and get back above this 1819 zone, now we could see another slide here, potentially maybe aiming for the lowest point of November near the 1765 zone, and then we could take it from there, guys. So for now I'm still sticking to this idea here, that we could see maybe a bit of a larger corrective move here higher, but if it struggles to get back above this 1819 zone or this 200-day EMA, another slide could be possible. Jumping into silver, silver is pushing higher as well. However, as I've mentioned to you guys yesterday, keep your eyes on that 21-day EMA, because we would like to see that daily candle staying below this 21-day EMA shown as the yellow line in order to go for slightly lower areas. But we got only a false breakout here and a beautiful test of this 25.89 zone. I've mentioned this one previously as well. Previously I looked at it as a good area of resistance. Now, as you can see, it took the role of support. So although the the commodity is pushing back up here, to be honest, I would prefer to see this this kind of precious metal staying at least above the 26.60 zone in order maybe to consider a move higher. But again, the day is not finished. I'll probably leave it as it is for today. I'll continue observing the price action, and we'll see where it ends today. If it ends, for example, below the 26.60 zone but above the 21-day EMA, that's my neutral spot, guys. I'm gonna continue observing the price action, and I'm gonna wait for that much better, let's say a much better move in order to consider the next short-term directional move. Jumping into Ethereum very quickly, Ethereum is popping nicely to the upside. Of course, weaker dollar. We have the ETH-USD, so the weakening dollar is kind of working out well here for ETH-USD. So we can see that the rate is popping already above this, or actually, wouldn't say above it, but still it's kind of aiming for yesterday's high, which at the same time is the all-time high, and that level is around the 1698 zone. So let's see if we can actually overcome it today. For now, I'm leaning a little bit more towards the upside. However, in order to get a little bit more comfortable, I need that break, comfortable with the upside, I need that break above this 1698 zone, and then I'll take it from there. But if we do get a break here, guys, and if we, let's say, if it starts working in our favor, this this position here, I mean, of course, don't forget about your stop losses. Just maybe placing it on a break even here could be better, because let's say if it pushes higher, it goes for another all-time high, but then let's say you start by the end of the day starts reversing heavily to the downside, at least you're protected. And well, I mean, this way you could at least, like I said, you could save yourselves from any losses kind of going into the weekend. So for now, long story short, in order to aim for some upside, yes, I'm looking for this break of 1698 zone. If we get that, then yes, I'll aim for some higher levels, and then I'll take it from there, guys. Now, jumping into a few pairs, AUD CAD. So of course the Canadian figures, kind of the Canadian figures were not as good actually as the US ones. For example, that, like I said, unemployment rate increased, and employment change has fallen quite significantly. I would say employment change came out, the forecast was at minus 47.5K. It came out at minus 212.8K, so a huge decline in the jobs numbers. So and we can see that it's taking its effect on the Canadian dollar. And here, for example, against the Australian dollar, the Canadian dollar is kind of depreciating. So we can see this pair moving higher. So far, from the technical side, everything's kind of working according to the plan. We are still, this upside line is still kind of doing its job, providing support. Now, in a way, what I'm going to do here is I'm going to take a bit of a neutral stand and a careful approach, because for me, I would prefer to see an exit out of this this squeeze that we're seeing right now. So if we get a break through the through the downside resistance line here and a push above the 0.9851 zone, then that's where I'm going to get a little bit more excited with the upside, and I'm going to go for some higher levels. In terms of the downside, as I've mentioned to you guys this morning, that a drop below the 0.7115 zone could do the trick here for more sellers, because at the same time the rate would be placed below this upside line here, and the further declines could be possible, because this break here, this drop below the 0.9715 would confirm a forthcoming lower low, and the further declines could be possible. USDJPY. So looking at this picture here, you can see that yes, the dollar index is drifting lower, so we can see that the dollar is weakening a little bit here. And yep, after the release of the data, we saw a decline here in USDJPY, so it's drifting lower. However, it's still balancing above the 200-day EMA and above this 105.35 zone. So as I mentioned to you guys this morning, that for me to consider lower areas, I would like to see a drop below this 105.35 zone, and then I could go for a bit of a larger correction here to the downside. So we're not getting that yet, but if we get that today, then yep, like I said, going into next week, maybe we could see a bit of a corrective move here lower. For now, as long as it stays above the 200-day EMA, it still has a good chance of pushing further north, because at the moment the trend is still to the upside, guys. And if you want to be a little bit more on the safe side, watch out for this 105.68 zone. A nice good daily candle staying above this could kind of indicate that the rate still wants to go higher, and the bulls are still dictating the rules. But again, given that we already had a decent up move here, at some point we will get that little correction lower. However, again, we didn't get that signal yet, so let's be very careful with any shorts. GBPUSD. So GBPUSD moved higher initially this morning. I said to you guys, keep your eyes on that 1.9115 zone and this 100-day EMA. So we got a pop above the 1.9115, and we got a test of the 100-day EMA here shown as the green line. We even got a small little overshoot here, but as you can see, the bears kind of pushed the pair back down. So again, we are at this borderline again, and we're still kind of taking a cautiously bullish approach on this one. However, if the pair struggles to get above this, or even get above this, let's say 100-day EMA, just to be a little bit more on the safe side, well, I mean, we'll kind of be, like I said, we'll be very, very careful with that upside, with further upside. For the downside, now if the rate suddenly falls back below the 21-day EMA here shown as the yellow line, then maybe we'll go for a bit of a correction here towards this 1.8848, or even we can round it up here a little bit to 1.8850 territory, and then we'll take it from there. But again, that's in terms of the downside. For now, the downside is slightly off the table unless we start seeing this this pair kind of getting a strong hold up near this hurdle and below this 100-day EMA shown as the green line. And finally, EURUSD. So weaker dollar is kind of having its effect here on this pair. We can see we can see euro dollar reversing sharply to the upside here, back above the 100-day EMA shown as the green line. So yep, I mean, in a way this could still be seen as a temporary correction, because don't forget that we are still, let me just grab what I'm talking, show you what I'm talking about here. Up. And yep, we do have this little short-term downside line, guys, which kind of in a way could still provide resistance even if we see the rate pushing a little bit more to the upside. So be very careful near this downside line. In a way, for now, like I said, I'm still leaning a little bit more towards the downside. As long as this downside line remains intact. If we break this downside line, in a way we could see the rate also popping above the 21-day EMA, but I would prefer to wait maybe for a push above the 1.2156 territory right here. However, don't get me wrong, I might readjust this level for the upside later on, depending on how the pair will act near this downside line. And for example, if it starts pushing a little bit more to the upside here, but fails, let's say, even to reach this 1.2058 zone, 59 zone, and drifts back down, and let's say starts moving maybe sideways later on, so maybe this 1.2059 level could become the one to watch, but that's later on, of course, depending, like I said, on how this is going to trade. For now, at this point in time, my kind of safe bet here for the upside could come on a break of this 1.2156 territory, and then yes, higher levels could be met. But at the moment, the upside is slightly off the table unless it's a bit more correction here to the upside. So guys, I'll have to wrap it up here. Thank you very much for watching and listening. I really appreciate your time, guys. I really do. Thank you for the likes. That means a lot, and I hope you found this session useful. It was a quick one just to see how everything's getting along. I'll let you I'll let you go on with your trading for the rest of today if you're still doing that. But in general, guys, everyone have a wonderful weekend, and I'll see you on Monday and at my Traders Espresso, 7 o'clock GMT time. Thank you very much, and bye-bye.